Welcome to the channel. I'm James, and today we're looking at the Target Corporation, ticker symbol TGT. They have just released their latest earnings for the quarter and for the full year, and we're going to be going through them today and then giving my fair value based on these earnings using discounted free cash flow model and the Buffett-Graham intrinsic value model. Is this stock a buy or a sell in 2022? And then finally, we're going to be looking at some technical analysis on the stock. So let's get straight into it. Currently, Target has a price of $222.91. It is up 11.5% on the day. This is because the earnings were released before the start of the market open, and the market has reacted pretty favorably to them. You can see it was around about $200 a share up yesterday as well, but since the earnings release, it's up 11% on the day. So that is excellent to see. It you can see here, post better than expected fiscal fourth quarter results. So let's have a look at some of the highlights here. Let's go to the top. What are the Q4 2021 highlights? Well, comparable sales grew almost 9% on top of 20% in fourth quarter 2020. Comparable traffic grew 8.1% on top of the 6.5% in Q4 of 2020. More than 95% of Target's fourth quarter sales were fulfilled by its stores. EPS established an all-time high at $3.21 and adjusted of $3.19, despite significant investments in team, price, and inventory availability. So that is very good to see. And finally, let's look at the full year highlights. Target delivered $106 billion in total revenue. That's grown over more than 35% in the last few years. Comparable sales is grown 12.7%. Comparable traffic 12.3%. Total sales have grown more than $27 billion since 2019. All five core merchandise categories have delivered double-digit comparable growth, and the operating income is up and the EPS is up. So excellent to see. That's from Target's highlights. But let's have a look at the numbers themselves and see if they say the same story. So firstly, can you please give a like on the video? It really helps me out, and in return, I will keep on bringing out as many videos as possible. So we have the 3 months ended on the left-hand side, and we have the 12 months ended on the right. So let's go to sales or revenue firstly. We've got the total revenue here, $28.3 billion in 21 of this quarter. That is up to $30 billion, almost $31 billion. So that is up, which is excellent to see, up almost 10%. And if we do the 12 months, $93.5 billion, up to $106 billion. So that is a 13% increase. So on the year, it is up 13%. Excellent to see. Next, we want to have a look at the net earnings. And how do we get net earnings? Well, we take revenue minus all of the other costs. So let's just have a look at the cost of sales. Now, bearing in mind, actually quite interesting here, if we look at the full year, it's actually up about the same, 13.3%, 66 billion to 74 billion. So the cost of sales hasn't gone up, but the revenue is still increased. So that is overall good. And if we look at the net earnings, on the quarter, it is still up 1.38 billion to 1.54 billion, so that is up about 12%. But on the entire year, 4.3 billion up to almost 7. That is a 59% increase. That is up massive. And we look at the EPS, 8.2 compared to 14. So this is up massively. Next, we're going to be looking at the shares outstanding. Are Target buying back their shares? And I think they will be. Yes, 500 million. To 488 million. So that is a pretty aggressive buying back program, which is good to see. It rewards investors, because if you have one share of a company and a company has 10, you own 10%, sorry. And if they buy back 5 of the shares, you would now own 20% of that company. So that is very, very good for investors. And you can see the dividends declared per share is up as well for those dividend investors, $2.70 to $3.38. So overall, the income statement is looking good. Now let's have a look at the cash flow statement, a look at free cash flow. So what do we want to do? We want to look at the free cash flow, which is cash from operating activities minus capital expenditures. Here it is expenditures of property and equipment. So what's happened to the operating activities cash flow? It is slightly down, 10.5 billion to 8.6. That is a bit of a negative, but a lot of things were different in the year ended on 2021, because obviously coronavirus did affect stores like Target quite aggressively. And the capex is up slightly, 2.6 billion to 3.5. So overall, the free cash flow in 2020 was about 7.8 billion, and that is down to about 5. So not necessarily a bad thing, because it was 4 billion in 2019 and 2.4 in 2018. So still up overall, but unfortunately down from the year ended on 2021. So let's have a look at my free cash flow statement, my discounted free cash flow model, and then we'll look at the Buffett-Graham intrinsic value model. So I've calculated the future free cash flows. You can see these are pretty conservative estimates, not even beating 2020 numbers of 7.8 billion up to 2025. This is a very, very steady growth back down in 2022. So let's see what that gives us. And that would still say the stock is undervalued massively, $307 a share, which is a 37% discount. So let's say we're a bit more bullish on target. Now, the problem for this is that the net income to free cash flow ratios are down a little bit, but usually it has been around average of 115%. That would put us in 2022 higher than what it was in 2021, and that would give a calculated stock price of almost $400 a share. So sort of on the more conservative estimates, the stock looks like a buy, and on the more bullish estimates, the stock looks definitely a buy. So now we'll compare it against the Buffett-Graham intrinsic value models. What this does is it takes earnings per share and expected growth rate into account. An earnings per share of $14, an expected growth rate over the next 5 years of 14% or just over 14%. What does that have it? In fact, that even has more higher fair value than even the other models. $520 a share, which is 133% discount at its value right now. So both of these models are saying target is a definite buy based off these earnings and what we are expecting. So it's good to see. A lot of the stocks I've reviewed recently, the models have not been too kind, but on target, they definitely like them. So on to the final part of the video, we're going to be looking at some technical analysis on target. Firstly, what I'm going to be doing is looking at some moving averages. So we have the price on the year here, the 50-day in green, the 100-day in yellow, and the 200-day in red. So before earnings, we were seeing quite negative movements. The price was below the major moving averages. It was below the 50-day, it was below the 100-day and the 200-day. The 200-day just recently actually crossed above these major moving averages as well, which is bearish. So overall, very, very bearish, but if you take into account here, the price has jumped up. It was actually a bit higher today, almost well, it says there on the day rate, 227 on the day, and has dropped down a little bit, but is now at 222. You can see that this is actually above the shortest moving average. So that is a bullish signal, which is good. It hasn't been a bullish movement since basically back in November. So that is excellent to see. Next, what we're going to be doing is looking at the MACD. The MACD is the moving average convergence divergence. And what this is going to show is, well, there we go. Let me just zoom in here. We'll zoom in on the year. And what is this showing? Well, a couple of things. Firstly, the signal line and MACD line have crossed. We're back in the positive here. This is signaled by these crossing here and the green histogram versus the red. So it is back on the positive momentum. Also, a negative momentum or bearish is that the MACD and signal lines are above the zero line. You would like this to be above the zero line back when it was in October, but it is trending in the right direction. So that is good to see as well. So overall, I would say the technicals are pretty strong, and even here it says it's a buy. And finally, let's have a look at the RSI, which is the relative strength index. It's not that one, sorry, RSI. What is this telling us? Well, it shot up massively. This is the daily, so obviously we're expecting some big moves. It was in the oversold region, and normally when it's in the oversold region on the daily, you want to be buying targets. You can see when it's been at the bottom of the oversold region, the price has made some pretty strong movements to the upside, and once again proven by the move up in February. If we go on the weekly, this will give us a bit more of a longer term view. And wow, well, you can see here, the target has actually never been this more oversold. At the bottom of the pandemic it was. And in fact, in terms of oversold, the sentiment was more negative now than it was at the bottom of the pandemic, which was a bad time for companies like Target. You can see basically, if you ever see Target this low again, that would be your buy signal. So let's even look here in December 18, it moved up. Back again in 17, it was pretty flat but did move up, and now once again at the end of February of 2022, big price movement to the upside. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, subscribe if you're not already, and I'll catch you guys next time.